From CRI Simple Numbers, this is Profitability Playbook, the Simple Numbers Podcast, a podcast for those who champion market growth and anchor the nation's economy, small businesses, and entrepreneurs.
Hey there, welcome to another episode of the Simple Numbers Profitability Playbook Podcast. I'm Mike Maxson, that's Brandon Gray, and we got another episode with special guests on it. So we got Tiffany and David with CRI's Preferred Legacy Trust Group, and we're going to be asking them some questions and discussing banking and getting funding for your business. So a lot to talk about today, and we appreciate you having you on today.
Yeah, so I would say that every client we work with has banking needs. Is that a fair assumption, Mike?
Oh, yeah, absolutely.
I don't think we have any that are cash-only businesses. What kind of piqued my interest is I was on a call with Tiffany, I don't know, a month or two ago, and she was talking about how that they can help clients secure funding. And I can't tell you the number of times that we've been on a call with a client. You know, we're going through the cash flow model. We're mapping out, profitability looks great, and everybody's all excited. And we go to the cash flow part, and we go, okay, here's the deal. You're going to have to go and secure, I don't know, let's make up a number, $300,000 of capital, whether that's through a line of credit or that's through a term note, or you've got to put the money in as the owner. But in order, because of your trade capital signature, meaning I've got to cover things like receivables, perhaps buy inventory. I might need it to cover launch capital, which, just as a reminder, those are the losses on an activity until you get it profitable. You're going to need that much cash. And they go, well, the line has $100K of room on it. And, I'm so busy. I don't have time to go find, another banking relationship, or the bank's kind of squirrely and I don't know if they're going to increase it. And I mean, just a multitude of things out there. And so, you start down the path and it ends up becoming a project. And because many times it falls on the entrepreneur's shoulders to go out and secure funding, it's a massive time suck. And so we were talking with Tiffany, and she's like, well, one of the things that we do, and they do a lot of different things, but the one that really caught my interest was, she said, we can help people find the right lenders. And I went, oh, really? Because there's a massive amount of time, as I mentioned earlier, and just not knowing, the ropes of how it works. It typically is like, okay, I'm going to go have lunch with 3 different banks, and they're all going to ask me for a bunch of information. And then each bank has their own little application that's a little bit different. And you're trying to get a feel, is this going to work? And I mean, it's a very slow process. And so we all know and can agree that time's the most critical thing whenever you're looking for funding. And so nonetheless, that piqued my interest. So David and I and Tiffany had a couple calls and went through kind of what they do. And I was like, all right, I think we need to tell everybody about this. So that's why we decided to have them on today, and so that they could let you guys know, everybody out there listening to the Simple Numbers Profitability Playbook, kind of what they can do.
You guys got to get used to that one. It's a lot.
It doesn't roll off the tongue naturally, but it really kind of talks about what we do. So I don't know, maybe people have a good.
We should change it to PQ, Profitability Playbook Podcast, just PQ.
PQ?
Yeah, P3.
May not be a bad idea. If you got ideas for what we should call, like, especially our creative marketing people, let us know, and we'll see if we can adjust it a little bit. But nonetheless, we welcome Tiffany and David onto the call. We've got combined between the two of them close to 60 years of banking experience.
Tell people that.
Oh, hey, that's a badge of honor.
You don't look a day over 29, each of you.
There you go.
Exactly. Yes, agree.
So Tiffany is.
Thanks for having us.
Hey, we're glad that you decided to join us today. Tiffany's president of Preferred Legacy Trust National Bank. David is investment strategist and bank advisory officer. So, we brought in the horsepower today as we kind of go through these things. So I'll just kind of kick us off, and we'll just kind of do a little Q&A if that works for y'all.
That'd be great.
All right. Good deal. So, you don't really hear much talk about bank advisory programs. So Tiffany, what is a bank advisory program? How do you guys run with that?
Well, Brandon, if you don't mind, I'd like to just step back a couple quick steps to tell you a little bit about Preferred Legacy. So Preferred Legacy National Trust Bank is a trust company by nature. We serve as a fiduciary for our clients in many different capacities. That includes such as a trustee or an executor, financial power of attorney. We maybe have some family office services that we do for them, but we serve as a fiduciary for our clients. That role includes that we can serve as a fiduciary for our clients in the bank advisory capacity. So what the bank advisory program is, in our past lives, and we mentioned that we had a couple of years in this financial industry, not to mention like 30 some each. Anyways, so we have a lot of experience. David and I have both served in various different roles at several different institutions. And that ranges everything from being a teller as well as all the way up to a commercial banker. So we have really the gamut of banking in our background. When we started Preferred Legacy, while we're a bank, we're not a traditional bank as what people would think. So clients don't come in and make deposits or borrow money from us, but we still wanted to be able to offer that to our clients. So we thought, how can we do this and how can we still give that benefit to the client while truly still giving them the best option for them. So we developed the bank advisory program where we can go out to the marketplace and find the best solution for the client. David and I have comprised of approximately 75 different lenders, brokers across the United States, where when a client has a lending and or deposit need, we reach out to them and find the best solution for that client.
Nice. So we can't stop by and see the pins on change at your bank? Is that what you're saying?
That's exactly what I'm saying. And for years of existence, we actually did have somebody walk in and want to open a checking account, which was quite humorous to all of us.
Yeah. Yeah. So interesting piece of information. When I was in college, I thought I was going into banking. And so I worked an internship with our local bank, little hometown bank, and I had previously been there in high school and had a phenomenal job as a high school kid. I was the purchasing agent. And so I got to buy all the office supplies for the bank, which as a kid, this was, you got business card and you're like 17, which I thought was just the coolest thing in the world. But nonetheless, so I went from that to being a teller, and you talk about miserable. I was there like 8 to 5 every day, just waiting on somebody to show up and give me some money. I could only count that drawer so many times. All the people I worked with were ladies near retirement, so didn't have a lot in common. But nonetheless, when you said that, Tiffany, it kind of reminded me of that. So,
listen, I have to say something else about that. I had never met somebody who thought they wanted to be a banker. That is amazing.
That is so true.
That was early on what I thought, because I got a job there working co-op in high school, so I got to spend part of my time at school in my senior year and part of my time working, and then small bank, and so I had contact with the president of the bank. And that was the plan. I was going to go to college to get a degree in finance and move back to the hometown bank and become a banker,
Excellent.
So I'm kind of glad it didn't work out. So David, kind of tell us about the process. So Tiffany mentioned you guys work with a lot of different banks and lenders, either on the deposit side or finding funding. Tell our clients a little bit of how that works.
Yeah, thanks. So, absolutely. So we first meet with the client, and we need to get that picture about what they're doing. So they need to give us a business overview, tell us a little bit about their history, and what makes them unique. So learn about the business background, the management team, find out what the ownership structure is. Then once we have that kind of synopsis, and we go back into a financial overview, ask them for their key metrics. What's your gross revenue, your net profits, the projections for all that. Want to get an idea of their balance sheet, as well as finding out what their accounts receivable, their inventory, and then find out about their existing banking relationships. We'll be consolidating those loans or just getting new money. So then lastly, they need to tell us about what their need is, how big of a loan they need. Is it a loan, line of credit, a bridge note, those type of things. And again, I also like to ask them what their desired terms are going to be, what they think the note's going to look like, just to kind of get an idea and make sure that we either set expectations with them or meet their expectations. So then we go to that network of lenders that Tiffany talked about, and Tiffany and I will powwow and try and figure out what lenders, have an appetite for this type of loan. And we'll split that. It may be 10 lenders, it may be 20. And we'll take that information and we build a little email synopsis. We don't use any names, but we send a financial picture kind of about the request to these lenders and see who's interested. So once we get response from everybody, we come back to the client. We say, hey, we have 4 lenders that have interest, want to learn more about your loan and your company. And at that point, we'll ask the client to sign an engagement letter and provide a non-refundable deposit towards our work. So once we have that engagement letter signed, then we'll go and actually collect the actual financials and send out a financial package to those lenders that have interest and ask them for a proposal or a term sheet. That's, again, where you start. It's not a final offer, but it's where we start and try and put together a good deal. Once we get the term sheets back, we'll evaluate them for the client, go over everything, come back to the client and say, here's 4 term sheets we have. Here's the pros and cons of each. We think you might want to go with this lender, and let the client decide what they think is best and kind of go over those pros and cons. Once we get a selection of the lender from the client, then we'll work with the client and the lender as an intermediary and go through the underwriting process with them and take it all the way to close. So the last thing they'll be doing is just signing off on the documents that we review for them and make sure that we've gotten all the terms that we've requested. So that's kind of the process.
Nice. And by the way, David was mentioning getting an idea of what your balance sheet looks like and your projections and what your key indicators. All our Simple Numbers clients, we're going to have that, right? We got it in the cash flow model, and we can show that to them and give them a really good idea. We've likely already been discussing kind of its consolidation or the type of loan that you may want to go after at a high level. And so, we can work pretty seamless with Tiffany and David to make sure that everybody's on the same page there. Make it easy.
I was working with Tiffany and David with a client of mine. I had the model pulled up and they were asking questions and we were looking through it on things. And one question for you all. I think this is important because we work with a lot of small business owners and entrepreneurs, and in this process, they're always going to wonder, like, how long of a time commitment will it be for me to engage with you all? Like, how much time will I have to spend in this process? Is there a range you can give us?
And a range is a good answer because it
I know better.
Like everything, it depends. It depends on the size, the uniqueness. In general, we're not doing real easy deal. I mean,
right,
an easy deal, the client ought to be able to get that done. So they're difficult deals, but in general, I'd say, Tiffany, 3 to 4 weeks, maybe.
I think, for the process to get us to a term sheet, again, depending on the client and how organized the client is and how readily available the information is that we need. It'll take them a couple hours to put the package together, maybe, 2 hours to get us everything that we ask for. But then our process to get to a term sheet is probably about 3 to 4 weeks. And then another 30 days to close after that. And again, that really just depends on the complexity of the deal. Like Dave said, I had a loan that we worked on that was $54 million. And it was a little bit longer than 60 days. But right now I'm working on one for a client, and I provided financial information about a week and a half ago to my 6 lenders. And I'm already starting to get term sheets over the weekend. So it took us about a week and a half to start receiving the term sheets in. And again, then once you decide on that client, probably 30 days to close.
Okay. Not bad.
Good deal. So Tiffany, is there like a profile client? I mean, kind of what do you see out there in terms of entrepreneurs and clients that tend to work best for you guys?
Well, certainly Dave alluded to this earlier. It's generally a client that needs a little bit more guidance in the lending process or the deposit process, whichever it may be. Somebody who's looking for a little bit more personalized service or has a deal that is not exactly straightforward. So they have some complexity to it. They're missing some collateral. They have a cash flow issue. They're a startup business, or,
Right.
they're profitable, but they've only been in business for, 3 years, and they're running into banks that just aren't willing to look at that yet. So again, somebody who is a little bit more complex. We generally work with high net worth individuals, somebody who doesn't have the time to handle their finances, business owners and entrepreneurs. Again, somebody who's newer to the newer as in a startup process, complex families. There's a lot of moving parts to it, a lot of trusts involved in it, and possibly even maybe somebody who's going through a major life event, such as a divorce. Maybe they're selling their business or anything of that sort, and they're looking to buy a business. Just some unique things that you wouldn't walk into the bank and get at your local bank that you worked at, Brandon.
Gotcha. So most of the clients we deal with, I would say.
When we met, exactly, Dave and
Yeah.
I got off the phone and said every one of their clients could really use our help.
And a lot of times it's just because, the bank, especially in underwriting, they got that worksheet and they're just trying to check boxes. And it's like, yeah, but you don't understand the business model. And if you understood the business model, then you'd feel much more confident about this business. But nonetheless, is what it is there. Good deal. Thanks for answering that, because I think that's important, especially as folks are listening in, to kind of go, all right, would I be a fit there, from that standpoint. So, just in terms of education, I guess, what are 2 or 3 things, David, that you would say are really important for folks as they're looking for a banking relationship?
Hey, it's a great question. So, Tiffany's got the number one thing is and Tiffany's got a great analogy here. It's like picking a partner when you're getting married. It's a relationship, and it's a financial relationship. So you want to find someone that you can be transparent with and honest. The other thing, I guess, is looking for nuances would make it easy to do business with them. And when I say that, I think, communication, again, is number one key in the relationship. And so how easy are they to work with and get a hold of? Do you have, do they answer your emails quickly? Do they give you at least a direct dial number, or hopefully, a cell phone number? That's something Tiffany and I have done our whole lives, always made sure our clients have our cell phone numbers so you can get a hold of us when you need us. And then lastly, I guess I'd say, kind of an important piece is making sure that the bank has the ability to grow with some of these smaller community banks, kind of like you started with when you started out with your internship. Have a legal lending limit, and it may be as low as $3 million. And if you're doing $1 million deal to start with, and your next one may be $5 million, well, you've already outgrown them. And it's never easy to change banks, so you want to make sure you have a bank that you can grow with.
Yeah. I really like what you said about willing to work with you, because I've got several examples of clients that, they hit a tough time and they were upfront and had discussions and conversations with the bank, and they kind of worked with them to get through it. And then, they come out on the other side. And so it truly is a partnership. So I think a lot of times we view it as almost an adversarial relationship, whenever, really should be the other way around. So
It's a marriage.
Yep. Highs and lows. So cool. Tiffany, one more thing, just kind of curious, we've been talking banking predominantly, but you said something a little bit earlier around, you serve as a trustee, as a fiduciary, those kind of things. So just kind of help everybody understand, those roles and what are, do you need somebody, do you need a trust set up? Do you need all of those kind of things?
Sure. Real high level here, Brandon, but
Sure.
essentially there are 2 ways that individuals pass their assets to their heirs. That's through a will or through a trust. A will is a public document, so it is recorded at the probate court, and anybody can go onto the probate court and pull up that document and read it. A trust is a private document. A trust, generally, if it's done right, avoids probate court, so there's nothing public about it. When you are selecting a trustee for your trust, it's important that this is going to sound funny, but you trust your trustee, and you trust the integrity of your trustee. When you're selecting a professional trustee, Um, as an R bank or any bank trustee, there's oversight that you don't generally have when you select an individual. So you want to make sure that, again, that you have somebody who has integrity and is trustworthy, that your trustees have the financial experience and expertise to manage the trust. I've had several trusts where we take over for individuals who are no longer able to handle the trust themselves. And it's kind of like us now as trustees are digging out the hole of what they've done in the past, such as not filing tax returns, not having the proper tax ID, not following the trust to the language that's it's written in. And just, again, making sure that your trustee really has that financial expertise. There's a lot to being a trustee. I mean, obviously, it's a full-time job. We have umpteen individuals who do it all day long for clients here. So it's a full-time job to be a trustee, and making sure that who you select has that expertise. And then, also when you're selecting your trustee, you want to make sure that it's a party or an individual who can be impartial and objective. It's really easy for Uncle Tom to read a trust document and say, oh, well, I'd really rather give this to my nephew, not to my niece, because she's never been nice, because there's no oversight. There's nobody watching what he's doing. But when we, as a professional trustee, step in, we have that ability to be impartial and objective. Whatever the trust document says, whatever the grantor of the trust wrote, is exactly how we're going to administer it. So, those three things are really important when you're selecting, a trustee and a fiduciary for yourself.
Good deal. I've heard a story. It was one of the Braves pitchers from the 90s. I can't remember if it was Glavine or Maddox or Avery. We sometimes refer to a trust as a way in which you get to govern from beyond the grave. And they had put in place like some interesting things to where if they had passed while their children were small, if their children decided to go to college, they'd get a certain amount of dollars from the trust. And then once they got married, they could get a certain amount. And, they had, if I recall correctly, he had some rather specific life events that, if this happens, you get this. If this happens, you get this. And I'm thinking, okay, that's pretty cool. But on the other hand, somebody's got to be the one to decide, if they're following that and, the emotion involved, especially if it's a family member and what have you. So it's good to have a third party who's not emotionally attached to it and kind of is used to understanding all the legalese.
Exactly.
Yeah, that's a good point. Tiffany's got a great analogy again there, talking about, Thanksgiving dinner can be Thanksgiving dinner and not an argument when you have a corporate trustee versus a family member.
Yep. Good deal. Well, thank you guys for hopping on and going over a few of those things. Like I said, I think it's, it's a very time-consuming process when you're looking for funding. It's one that if you pick the wrong institution to go with, now you're going to have a relationship that's not really fun. Just being able to have the access to, I think you guys mentioned 70 something different relationships that you have to find the right people. I think that's really cool. So if you're listening, whether you're a simple numbers client or not, and you're interested in something like this, hit us up. We'll definitely be happy to put you in touch with Tiffany and David. And, they can kind of look at the situation, find you the right partner. And hey, we can keep focusing on labor efficiency and profitability and work trade capital and where we want to go next. And just know that all the work is being done behind the scenes to line up the capital to make it happen.
Awesome. Well, yeah, that was great. Thank you all for joining us, and hopefully we'll have you again on soon and do some more talking about how you can help our clients and people who other people, not just our clients, but anybody who's listening out there who might want to take advantage of what y'all do. So we appreciate you. So for everyone listening, we'll catch you next week.
See y'all.
Thank you so much.
Thank
Bye-bye.
you.
If you want to know more about driving sustainable profitability for your business or are interested in learning more about CRI Simple Numbers, please visit our website at simplenumberscri.com. Thanks for listening to this episode of Profitability Playbook, the Simple Numbers podcast. You can subscribe to Profitability Playbook on Apple Podcasts, Spotify, or wherever you prefer to listen to podcasts. If you liked what you heard today, please leave us a review. The views expressed on Profitability Playbook, the Simple Numbers podcast, are those of the presenter and moderator and do not necessarily reflect the views of CRI Simple Numbers or the CRI family of companies. This podcast is intended for informational and educational purposes only and is not intended to replace professional advice received directly. Consult with your CRI Simple Numbers advisor or another trusted professional if you have questions about your specific situation.